What's good, my fellow YouTubians? It's your boy Charles Enoch. Y'all already know we back with another episode of Investing Myself. So run the clip. All right, so today we're gonna go over how to pay off your Mercedes or that luxury car that you have. But before we get into any detail, you already know your boy has to do the YouTube thing. So I'm getting close to 1,000 subscribers and over 4,000 hours of watch time to be monetized. So I'm gonna ask y'all to help a brother out. Go ahead, if you haven't done so yet, smash that like button for me. Make that thing turn blue. If you're new to the channel or you've been watching a couple of my videos and you haven't done so yet, take a little time, hit that subscribe button for a brother. And if you don't mind, share this with at least one person that you think this would be helpful for them. I really do appreciate anybody that takes the time to do these because it does help me reach a higher audience base. And definitely leave a comment and let me know if this information is helpful or if there are some things that you guys are wanting to see in regards to velocity banking. Now it's getting hot outside and I've been down these streets with my little 2013 Camry and I've been seeing some clean whips out here. Now, me personally, I'm not a car guy. I just need something to get from A to B that's reliable. But I ain't gonna lie, I be turning my head, breaking my neck when I see somebody pull up with a clean whip. I'm like, oh shoot, brother, I see what you got. But for me, them luxury cars are too expensive. Or I should say I prefer to get a rental property rather than a luxury car. But to each his own. But I mean, I might get something in the future that may turn heads. Who knows? But anyway, we're going to look at an example on how to pay off a Mercedes using your credit card in the velocity banking method. In this example, we'll be using a debt payoff calculator, which you can find on my Patreon page, which I will have the link down below. So go ahead and support. All right, so let's take a look at the example that we're going to have for today. So I was pretty much taking a look at averages for Mercedes cars. It ranged between 40K to like 180K. So we try to do the middle, the average. I put around 80,000 for the Mercedes car. We're going to do an interest rate of about 4%. We're going to do a loan period of 5 years, obviously 12 months. You pay a payment every single month. So if we look here, we're going to have to make 60 payments. And the interest on those, if we were just to do the payments every single month, a little over $8,000. So how we're going to do this here, we're going to say this individual, they were approved for a credit card for $20,000 and it has 18-month 0% interest rate. So what this individual is going to do is pretty much take a convenience check. They can cash it to themselves so they can get the cash, or sometimes the bank, they can actually just send a check to the car company as a payment. So either way, however you work that out, we're going to make our first payment of $20,000, pretty much the full credit card. And when we do that, we see the interest $8,399. See what this goes to here. So we see that the interest dropped to $4,667. So that's roughly about $3,700 in interest that we paid based off of that first chunk payment. We see the actual numbers of payments go down to 44 payments. So we pretty much knocked it down by 16 months using that credit card, using the chunk method. Now to make things pretty simple, because we're just trying to understand the methodology of velocity banking, we're going to say this individual's cash flow is $1,111.11. Pretty much if we times that by 18 months, that would equal the $20,000 of cash flow that you would keep onto the credit card, basically. So obviously you're going to have to tailor it to your specific cash flow. Again, if you have little cash flow, you obviously should not be getting a luxury car. So make sure that you're getting something that you can definitely afford. So let's say this individual has that 1,000 cash flow, they're still going to be making their scheduled payments of this 1,400, but the extra money that they have left over, they're just going to continue to put that on the card, and in 18 months that will be filled up. So let's scroll all the way down. Here's 1, 2, 3. All right, so month 18, let's say that they have the card all full and it is paid off. What this individual can do is pretty much they can try to get another credit card. Let's say it's $20,000 and it has that intro of the 0% for 18 months. Or this individual, a lot of times these cards, they'll continue to have special offers in regards to convenience checks in the mail. And if, let's say, this individual got another special offer for 18 months, 0% interest. So we're going to put that in, that they're going to make another $20,000 chunk payment. And we see the interest a little over 4,500. Let's see what that does with another chunk payment. So we see the interest, it went down to 3,422. So that's a savings of about, say, $1,200. We see the actual numbers of payments now go down by another 15 payments. So the actual number of payments that we're going to be paying on this amortized loan is actually 30 payments. So we'll get it completed in half the time. So we see here, we would actually be done paying off the loan before we get done paying off that 0% credit card. And remember, we have 18 months. Now, what happens here, this scheduled payment of $1,473, after you completed that becomes part of your cash flow. So once you get that loan completed, you already had a cash flow of $1,100. You would tack that on, and all your extra cash flow, you will put that onto the card. So you're going to be paying off your card even faster than 18 months. So this would be an ideal way of how to pay off your Mercedes or luxury car. So if we take a look here, the total interest that we're paying is $3,422. If you remembered, the actual interest was about $8,400 if we just made regular payments. So that's a savings of $5,000 basically. So we knocked out a whole lot of interest on the loan, and that's what we're wanting to do. And we pretty much paid it off in half of the time using the Velocity Banking method. So I hope this was very helpful for you guys. Remember to like, definitely leave comments if this is helpful. If it is not helpful, if there's something else that I need to explain, definitely tell me in the comment section so I can make these adjustments. Again, I'm here to help educate people on how to pay off your debt a lot quicker, pretty much in half the time, sometimes even in a third of the time. So please let me know. Again, if you haven't done so, definitely hit that like button for me. If you're new to the channel, go ahead, hit that subscribe button for me. Help a brother out. I always appreciate anybody that takes the time to do so. It helps me reach a higher audience base. And like always, you guys have a good weekend. Peace out.